Hello everyone, welcome to the video update for my portfolio in May. Some big changes in this video and we'll get straight into it now. Hi everyone, so as you know, if you've watched the previous video, Marston's had a bit of a jump, and as you know, I was holding out on some shares. So I've actually sold all my Marston shares now, and I got a really good return of about 93%. And so what I've done is I've now invested those in a lot of new stocks that I've wanted for a while but not been able to afford to get. And it's just enabled me to really diversify. I've bought an ETF, I've bought some staples. So yeah, we'll jump into the phone and we'll have a look what I've done. Okay, here we go. Trading212. Let's load it up. And here we are. So this is my watch list at the minute. As you can see, I've added some things on the watch list. Realty income in particular. That monthly dividend is just something I'm really looking forward to getting. If we have a quick look as well, you can see for the year it's quite low. It has some good dividend yields, 5%. And as you know, it's a monthly payment, so that's on my watch list. I put Marston's back on my watch list as I don't own it anymore. If that drops low again, I might buy some more. But as you can see, it has really jumped up this last month. That is the point when the news was announced it was going to split and merge into a new company. It shot up, 63%. You can see on the top there. Also, I've got a few others on the watch list. I've got Hollywood Bowl, Greggs, Stag, Gladstone Investments, EasyJet. I'm looking at them all really. Just keeping an eye on them. So, if we go into current daily figures, as you can see, the last day of trading was atrocious. Everything was down. But if we go into my actual portfolio. Okay, so this is the 3 months trading from when I started. You can see back there, that's when I started. I've never really been in the red before until this last month. And as you can see there, I was 26p in the red. That's the first time I've been in the red this last month. So this is the last month's graphs. As you can see, it's rather turbulent up and down. And this is the last week. And the week, to be fair, was very good at the start. I mean, all week has been pretty decent. I've been well happy with where I was. It's only the last couple of days where it's took a dive. And obviously that's the last day of trading. So yeah, that is the month for you. As you can see, I've added money in twice. I added some money in there and I added some money in there. Let's go and have a look at what I've actually got. So I sold the Marstons and I got some staples. So let's have a look. That is the portfolio at the minute. Got 5 shares of Barrett's I've bought, and they're looking pretty good. They're up 2.68%. I've got 1 share of CocaCola, which I've been wanting to get for so long. I finally got it. And again, that is up. It's up 1.84%. I've bought some more Lloyds group shares. I've bought 20 more. I had 60. I've upped that to 80. And that's just cost averaging down because I've been down on Lloyds ever since I got it. But as you can see, I'm finally in the green on the Lloyds, which I'm super happy about. So I'm trying to even the shares out really to make the portfolio more even. I've got Old Republic International. I've got 1 share of that. As before, it's 54p down, 4% down. And to be honest, I'm happy where that is at the minute. As you know, if you watched any of the other portfolio videos, I've been down on this since I got it. And this is the only one I'm down on. and it is the only one that I didn't really research. I just took it off face value from a Facebook video I watched. Now, to be fair, as we're going to go into in a minute, it's quite undervalued, Old Republic International. So hopefully that will recover and go into the green. I've also got one share of Royal Dutch Shell. And I'm looking to get another one of those to make it about £24-25 invested. 15% up on that. And I've also got a Vanguard FTSE All World High Dividend share for £37.49, which I'm up 64p or 1.74%. And that's a high dividend ETF. So if we're going to go into all of these individually, there's Barrett's. And for the month, I'm up from where I bought from, but it has been quite turbulent. As we can see over the year, it's still down and it's recovering quite well. You can see the upward trend from where it went down. So I'm happy that's an upward trend. I think it will keep on going up. If we go down, so I've got 5 shares. And it's got a market cap of 5.12 billion. The PE ratio is 7.33. The dividend yield is 3.67%. And if we go into the all ratios, the earnings per share normalised 73p with a dividend share of 29p. If we look at the growth, you can see the dividend yield growth of 3 years is 16.72%, which is a pretty impressive dividend growth rate. So yeah, Barrett's is looking pretty good. I'm quite happy with Barrett's. You can see the income statement. The net income is £740 million from a revenue of 4.76 billion, which is a profit margin of 15.54, which is okay. Balance sheet is looking really good. And if we look at some more details for this, let's go down. We can see the valuation is currently undervalued for Barrett's. A fair value price at the minute is £8.10p and it's currently trading at £5.3. And if we do look at the dividends for the Barrett's, you can see it's at 5.25%, but you can see the company has 0 there. That is because the dividend has been cancelled by the looks of it. So for now it's not giving a dividend out, but when it was pretty much market top. You can see the 5.7 market top and the 5.25 it was currently giving. You can see it was towards the higher end of the market average. So yeah, it's a good dividend when it's paying out, but it's not paying out right at the minute. Okay, so that's my Barrett developments. Now we go to Coca-Cola. Everyone knows Coca-Cola. You can see for the last month, again, it's been a bit of an up and down situation. But as you go further down, you can see where the crisis hit and it went all the way down, and it's now averaging up. So it is recovering. Market cap of $200 billion, which is staggering. And it's got a dividend yield of 3.45%. If we look at some details, earnings per share is $2.18 normalised with a healthy dividend of $1.59-ish. So yeah, it's pretty decent. If we look at the growth of Coca-Cola in the last 3 years, it's 4.83%. So not massive growth, but it is a staple. Okay, so we'll look at some more details. It's currently trading at roughly the right value. So it's not overvalued, it's not undervalued, it's pretty much bang on. And if we look at the dividends, 3.51%, and the upcoming dividend is June the 12th. So you've got 12 days to get to buy your share. And yeah, it's going to give out a 3.5% dividend at the minute, which is pretty good. So that's Coca-Cola. Let's go and look at Lloyds. It's been choppy, but for the year it's still very low and it's trending downwards still. So I don't know where that's going to end up, but we are in the green for now. Now the thing with Lloyds, let's have a look at the details. The earnings per share is normalised is 4p with a 3p dividend. And the growth on it over the last 3 years is 9.74. So it's not a bad growth. We look at some details. You can see the net income of 2.92 billion. The assets to liabilities is quite high though. It's 94.29. And there is the cash flow. So let's have a look at a bit more details of Lloyds. Okay, so there's Lloyds, a bit more details. You can see it's currently overvalued at the minute. I'm actually thinking of selling these shares. I'm just in the green, but it is overvalued at the minute. With the dividends, it's 7.24%, but the company is giving 0%. So, the industry average is 7.5%. So it's around the industry average, but unfortunately, the dividend has been cancelled by the looks of this. Yeah, the payments are expected to go down to 0, and then it's expected to shoot back up. Okay, Old Republic International. I'm unsure what to do with this one, to be honest with you. I've been down on it since I bought it, and it's just trending flat from what I can see. But it is giving a dividend yield of 5.39%. We've got an earnings per share normalised of $3.51 with a dividend of 80 cents. So, yeah, it's not bad dividend-wise. Growth-wise, over the last 3 years is 2.17%, so not much growth. We look at the financials. The balance sheet, again, 70% debt to assets. We can look at a bit more information on this company, ORI. Let's just go and have a look. Okay, and this is why I'm holding Old Republic International. It's very undervalued still. It's 47% undervalued. It's saying the fair value should be closer to $30. And if we have a look at that dividend yield, the dividend yield of 5.39% is a very good yield, and it is paying out at the minute. It's going to be paid out, well, the ex-dividend date is 4 days from now. And then payment day is the 15th of June. So yeah, so 10 days after it's going to be paid out. It's going to pay out 5.39%, which is pretty good. And if you can see as well, the industry average is 3%, and this is actually paying out 5.4%. So it's paying out quite a good dividend, and that is why I'm holding this company still for now. But it is what I'm keeping my eye on. I do think because it's so undervalued. There we go. I do think because it's so undervalued, I will hold on to it. I think it will go back in the green, although it has been in the red ever since I bought it. Royal Dutch Shell. For the month, you can see we are in the red, but it is being hit and miss again. For the year, it is down a lot, and it is trending down for the year. But I am in profit. Market cap of 112 billion pounds. It has a net income of 15.8 billion pounds, and with a revenue of 344 billion. It is a massive company, obviously, everyone knows it. We're going to the all ratios. Earnings per share normalised is £2.70 with a £1.70 dividend share. If we take some more details, for Royal Dutch Shell, it is severely undervalued. It's 70% undervalued. So yeah, this is definitely for me a buy and hold. And if we look at the dividend information, the dividend is 4.08%. The industry average is an 8.5%, so it is half the industry average. It doesn't let us know when the next dividend is. Okay, and the last one is the Vanguard FTSE All World's High Dividend ETF. For the month, you can see it's about where it started from the beginning of the month, but it did take a dive and it has recovered. You can see the crash go all the way down, and now it is trending upwards for the year. So it is on a very good upward trend now from the crash. I'm up 1.74% on it. We have no other details on this on here. We don't actually have any information on this on the other app either. I've just been looking. And that's the portfolio for this month. Let me know what you think in the comments. Let's have a quick look at... oh, hang on, I've moved it across here now. Upcoming earnings. These are the companies that are about to release earnings. And back to the watch list. So yeah, I think my next purchase is probably going to be half a share of Reality Income or Realty Income. Thanks for watching. Let's jump back out of the video. Just another quick note before I go. It's saying I'm £3.44 up so far. That's 2.36% up. And I've invested £145.70. My portfolio is worth £150. Just to let you guys know, sorry, I have only put £100 into this, so the extra £50 is what I'm actually up. Obviously, the way the app works, once you sell and rebuy, it resets that return. So I have only put £100 in, so my return is really 50.65%, so which I'm super happy about in 2.5, 3 months. I'm super happy with that sort of return so far. So yeah, £100 in and £150 in the account. As you can see, I've got a tiny little bit of free funds. I'll be adding more money in and getting that up even more for you for the next video. So that's the portfolio. Thanks so much for watching. If you want to have a go at this yourself and you're not yet on Trading212, I have got a referral link below. If you use that link to either start the ISA or the invest on Trading212, we'll both get a free share, and I'll share that on here. If I get any, I'll share them as well. So thanks for watching. Don't forget to like and subscribe. I'll see you on the next video. Thanks for watching.